Thank you very much. Want to echo all the commentary we've already heard. Thank you very much to Urbana, Liz, for setting this up. If you're picking up the call while you're working out, the amounts of email you send to coordinate is incredible. So you're a very active lady.
Thank you.
I will also apologize. I've had a cough for about 2 weeks. It's lingering. I have a 3- and a 5-year-old. We catch everything that goes around the Toronto school system. So I do apologize for that. I'll skip my bio and the shameless picture. Moving on, I want to start with a little bit of a survey. How many people in the room hold digital assets? I got a few fingers up. Okay, perfect. And then how many know how their digital assets are custodied or where? No? Okay. So maybe we start with custody and why. The reason we wanted to put the history of money and custody here is because they go hand in hand. It's as simple as that. It starts from the original barter economy where individuals were holding their goods, moving on to things like the gold standard, to digital assets in 2009. The need for custody, and we'll get into a little bit more of that, what that means. Also, you heard from Richard, obviously around, tokenized securities, digital securities, where the world is going, digital identity. At the end of the day, all of that requires a custodian, which is why Tetra was formed. A little bit around storing of digital assets. So when you think about the concept of custody for digital assets, there are 3 main concepts. There is self-custody. So, a lot of individuals that got into the space about 12, 13 years ago would be very familiar about self-custody because at the time there was no institutional grade custody as a product. Third-party custody, we won't mention some of the discount brokers that have been passed around during the day today. A lot of them are offering digital asset product today. The reality is they're doing third-party custody. So you don't actually own the assets yourself. They're held in omnibus accounts with the underlying platforms. Which brings us to the need for institutional custody. And we'll talk a little bit about how we got there in Canada. But the reality is we need institutional grade custody the same way we are servicing other asset classes in traditional finance. I wanted to spend a little bit of time on the technology itself, not to get too granular, but a lot of times when we speak about wallets and how to store digital assets, there is the concept of hot and there's the concept of cold. Wanted to just briefly touch on that. Hot, think about internet connected, very usable, very transactional. The flip side of that is security. The cold side, offline, air-gapped, not available in a connected environment. And essentially it is a constant trade-off in custody of digital assets between hot and cold. Do you want usability, you want to be transacting at a very high rate, or do you want cold storage, you want to sleep at night, you don't want to worry about where your digital assets are stored. Both concepts have underlying technology to them. One is MPC, multi-party computation. Again, not to get too technical, you have one key, it's split in 3. So as long as you have the 3 pieces of the key, you can sign out assets. Very quick, very easy. Multi-sig, which stands for multi-signature on the other side, is more complex because you have multiple parties that need to come to the table to do a transaction, which is also why typically cold storage is seen as more secure. So want to touch on those concepts a little bit, and we'll dig into that as to why that's important a little bit further in the presentation. Now, I wanted to talk a little bit about the landscape of Canada and how we got to where we are today. So we talked a little bit about private allocation to digital assets. So 2009, white paper, Bitcoin makes a resurgence or is born. You now have a period of about 10 years where the whole space is unregulated. And you have unregulated custodians. You have unregulated, I'm going to say crypto trading platforms or CTPs because they're not exchanges, Richard. So you have unregulated CTPs. And you essentially have an event in Canada, Quadriga CX, in 2019. What happens? about $200 million of digital assets disappear overnight. Why? Because the founder of the trading platform essentially dies in India. Great documentary on Netflix for those that haven't seen it. And essentially disappears with the assets. Why? Because he's the only one holding the keys. That leads to your third point, which is regulatory changes by the IIROC and the OSC. So Canada is the first country in the world that set up a very clear framework for crypto trading platforms. And that also happens in 2019. So what we would say is a proposed framework first, and that's been evolved over the last few years. But that also happens in 2019, which leads to essentially your first Bitcoin ETF in the world also launched in Canada in 2021. So that would have been purpose that what brought the offering first to market. Some people would argue specifically, for those who know Fred Pai, that 3IQ was first. That is correct. But the OSC had denied the original application of 3IQ, and they were stuck in court while purpose took that place into the marketplace. Where we are today, which is essentially the need for fully qualified custodians. So again, a concept in traditional finance that is just accepted. If you think about INTS, where I used to work at, the old Royal Trust, traditional custodians are all trust companies. They're all existing. Average retail investor, or even institutional investors don't necessarily think about their custodian at times. But for digital asset, that concept is very new. If you think about, the timelines that, I'm talking about, 2021, that's last year. Right? So the industry is, to say nascent, is an understatement. And then where are we going from here? I was going to use mass adoption, but democratization, I think, is a better word. So, essentially democratization of digital assets throughout the entire ecosystem for financial institutions in Canada, right? Will it happen tomorrow? The answer is probably not. But what we do believe is during the next up cycle for digital assets, essentially there will be a slew of offering hitting the marketplace in Canada, and Tetra wants to be positioned and leading that wave for custody. A little bit on some of the numbers for digital assets. So stable coins, the first one, digital dollars, USD. Backed securities, right? USDC, USDT. You now have a premier in the UK as of yesterday that's talking about setting up a equivalent of the sterling on chain. Whether or not he will last, who knows? But the future for stable coins looks pretty bright. Bitcoin and Ethereum. This is very important, right? The 50% of your digital assets today is between two assets, right? So not by design necessarily, but also not a shock if you think that a lot of the investable products that are available in the marketplace today, including Canada and globally, are these two assets. Another interesting stat is there's a lot going on in the Web3 environment, but actually the top 10 assets only make up 77% of the entire marketplace, which means that there's huge concentration at the top. I'm also leaving digital JPEGs out of these calculations. If somebody is willing to pay $400,000 for a monkey with a cigarette for a profile picture, that's great for them. But ultimately, that is not part of these calculations. Why do we put 100 trillion? Quite frankly, it's not arbitrary. Fixed income as of 2021 was about 125 trillion globally. Equities as of Q2 of 2023 was about 111 trillion. Half of that was was US securities, right? So is it unconceivable that digital asset will be a $100 trillion market in the next few years? The answer to me is no. And I would also say think about innovation, but also think about what the corporates are doing. There's a lot of investors in the crowd today. Listen to Nike's last conference call. They have been selling about $120 186 million of digital goods in the metaverse. You would ask, why does a company that does about $40 billion in sale a year doing in the metaverse for a couple $1 million or $100 million and change? The reality is because they care about their customer and the consumer. This is where the customer is going. This is where the consumer's identity is going, and they want to be part of it. So we believe that there's a lot more innovation and a lot more adoption that's going to happen in digital assets. If you're familiar with the S-curve of the adoption, we are still very much at the bottom of it. So a little bit more about what Tetra does. So Tetra was founded in 2019, but I like to think about Tetra as being roughly 1.5 years old. And the reason I say this is it took about 2.5 years to get the regulatory license to operate. So really the regulatory license for Tetra was given in 2021. So we are a fully licensed trust company under the Alberta Loan and Trust Corporation Act. Why does that matter? I mean, we heard from Mark this morning at Highview why trust companies are important when you're storing assets for your clients, right? It is the trust. We don't rehypothecate. We don't own the assets ourselves. All the assets that we have on our platform belong to our underlying client. We are registered by the Alberta Treasury Board of Finance, or the ATBF, so the Ministry of Finance of Alberta. Why Alberta? Simply because they are more open to digital assets. That being said, we service clients all over Canada. We have clients that are registered under the BCSC, the OSC, the ASC, so we work with all regulatory bodies. Additionally, you know, the IROC broker-dealer framework is something that we're very familiar with. And Richard would be as well, because we've lost a few nights on this. But we got an exemption recently to be servicing or providing custody services for the first digital asset broker dealer in Canada to get the license. So CoinSquare, our CCML, more technically CoinSquare Capital Markets. So Tetra is making inroads, I would say, with all regulators across the country. We do have to provide a lot of education. I do spend a lot of time with regulatory regimes across the country, and will continue to do so. Another great little stat here is that we are essentially able to custody any funds under National Instrument 41103 or 81102. So essentially all your asset managers in the country. Moving on. So why did we build our product and who is it for? The reality is we like to, you know, point to these 4 categories that make us different than technology providers that would be in the marketplace today. First, and more importantly, we're regulated and compliant, right? So it might seem like a novel concept for a crowd of financial savvy players like yourself, but at the end of the day, there's a lot of unregulated providers and uncompliant providers in digital assets today. We are the exact opposite. Think about us as a traditional custodian, right? We do have capital buffers. We are compliant. We go through multiple regulatory oversights a year. We file all of our our financial statements, not just with our own regulator, but also with the regulators of our clients across all provinces. So there's a lot of eyes on Tetra and what Tetra is doing today, and mostly because we are the only provider of institutional grade custody for digital assets in Canada. We are audited, right? Again, novelty for this crowd, but third-party financial audits, security audits, operational audits, SOC 2 Type 2s, proof of reserves that are done biannually, which means that essentially we sit with our auditors twice a year. We open up the kimono, they tell us everything is good, and then we share that publicly, more importantly, right? So everybody can see what we have, and there's 100% transparency. Insurance, which is a funny topic in digital assets, probably most people would not know this. There's not a lot of insurance for digital assets. There's only a few providers globally that insure the pool. In a traditional custody model, one-for-one insurability is required, specifically at the federal level under OSFI. Tetra offers some of the best insurance on the planet. So not only are all our providers insured, We have pieces of our portfolio that offer one-for-one insurability. So Knox, specifically as a service provider, is the only service globally that can offer one-for-one. It's a huge deal and a huge competitive advantage. So insurance we take at heart and is very important for us. And then security. There was a decision made pre my time as CEO of Tetra to consider technology and the technology solutions that we would use. We had native technology and we decided to essentially shelve the native technology and work with best-in-class providers globally. That is also very important for us. I don't want to get a phone call in the middle of the night because we've been hacked, right? We work with some of the top companies in the world. They're incredibly well funded. They have entire PhD departments that are trying to hack their solutions every single day. Why take that risk on when you're a young company trying to make a margin, trying to grow, trying to build something? There are some great solutions out there today, and we decide to leverage some of them. So a little bit about our partners here. Another piece of what makes Tetra different than some of the other solutions out there today is that we are not a one technology platform. We have decided to build a portfolio of technologies to essentially do everything from hot to cold, right? If you look at the majority of the bank deals that are being announced in the last 2 years or so, all of them are taking a lot of specific bets around technology providers. They're announcing partnerships with Copper, with Fireblocks, which, you name the company. The industry is too young to figure out who's going to win the race. They all have pros, they all have cons, there's all product gaps across the board, I would say. So Tetra has taken a decision to essentially bring together a portfolio of technology. It allows us to do two things. One, better service our clients because we cover everything end to end. What I mean by everything, I mean all the chains, all the tokens, all the NFTs, etc. And then over time, as there's a certain maturity in the industry that will come, it will allow us to tailor our partnerships a little bit more precise or more surgical, right? Being able to potentially take out a partner if it doesn't do the job or potentially bring somebody else. Not being embedded with technology, that's hard to unattach from. So very important part of what we do. And again, this is something very unique to Tetra. The majority of the companies don't do this. Want to talk a little bit about our lovely investors. Wanted to make the point that Tetra is backed not only by, experienced, market leaders in financial services, we also have crypto native companies as our backers, right? To us, it's very important because we're trying to bridge traditional finance, digital asset finance, right? And for us, having a representation of these shareholders on our books is also incredibly important. We've had phenomenal backing from everyone. We're very proud, happy, and we're also proud, very happy of the support, and continue to appreciate all the support that's being given to us and humbled. Again, this is incredibly early as a company. I think listening to the presentations today, I don't want to say, but we're probably the youngest company in the portfolio, or not quite. We will be, yes. Yeah, okay. And then, one last announcement before I go to question. I see I got 10 minutes and 25 seconds and thinking. Essentially, Tetra announced a deal with 3iQ in the last few months. So for those that have not seen it, essentially Tetra has one custody for one of the largest digital asset provider in the world. That essentially means that all of a sudden we have about 30% of the market share of the ETFs in Canada. It's a huge deal for a company of our size and of our age, but it shows the opportunity in the marketplace right now, and we're very excited about things to come. So I will finish there, and I have time for some questions. No? Okay. Yeah.
Wait, microphone, please.
Oh.
Thank you. Actually, it's not a question. Technologically, this is well above my line of country. But the deal you mentioned, 30%, with the IQ or whatever, congratulations. That's tremendous at any age. Even more at a year and a half, but congratulations. That's very, very
Thank you.
serious accomplishment.
Yeah, we appreciate it. And please all talk to Raj. We would love to custody his ETFs.
We'll lean on him.
Yeah. Any other questions?
DJ, you needed to mention him instead of purpose, because they were number 2.
Yeah, they were number 2. That's right. Yeah. Oh.
Where?
Oh.
Keeping with my earlier line of our investment style, we made the investment in you just as you were starting out. Since then, there's been a lot of, let's call it volatility. People always say volatility when they mean the thing's going straight down. There's been a lot of volatility in the crypto market. What do you see as the future? I've got my own views, but what do you see as the future of crypto, and why do you think this is like the chart you put up there about how money works? We've gone for a barter system to a gold system to gold standard to not the gold standard to fiat currency to this brave new world. How do you see the future going? To me, I'm sorry, I asked you a question, but now I'm giving you time to think. It's kind of like the tech wreck in 2000, where, you know, Global Crossing, they would never use all the fiber optic cable that Global Crossing laid down. Netflix, call your office. So we're in this bit of a lull period. That's what I think. What are your view?
Yeah, so first of all, I would say I agree. Now, the interesting thing about what happened is it's actually the business case for a Tetra-like solution, or validates the business case, right? Because if you think about whether it be the Celsius, the 3 Arrow Capital, or the Voyager, or some of the big 3 companies that really took down the entire digital asset market, if they had a trust company custodying their assets, none of that would have happened. Why? Because they were rehypothecating assets. They were taking assets from their client and they were turning around, they were lending them away, right? Nobody was monitoring that. There was no financial oversight as to what was being done. You know, there's famous, we have a company actually in Canada that's in the lending business for digital assets. It's called Ledin. If you have a chance to listen to Adam speak, Adam would tell you, we were looking to work with 3 Arrows Capital, and when we asked about their financial, they gave us a letter signed by the CEO saying our financials are great, don't worry about it. So the need to have a trust company behind is essentially you know, very important, and the case has been brought up because of what's happened. Now, where it's going, I certainly have a view. I have young children, 3 and 5. I think they will never bank like I've been banking. Right? I managed operations for RBC, wires, Interact transfers, all the things that you think that are happening almost instantaneously. They fall on the ground. People are picking them up manually. There are thousands and hundreds of thousands of people working in operations, reconciling, you know, essentially financial transactions every single day. This technology solves all of it. Why is it not moving quicker? Because the bank stacks are built on technology that are from the 70s and the 80s. My systems at RBC were built on COBOL code. They don't even teach that in school anymore. So there is a huge problem in a financial system, and I do believe that that changes. Where it potentially goes is the concept, I believe, of digital identity, which is what I personally am very excited about. Recently, we were in New York presenting at the Digital Asset Summit, and Ledger, one of our partners, took us out. More than half of the companies at that Ledger private event were brands. They're not financial service companies. They're thinking about their consumers. They're thinking about the environment. They're thinking about, if you're going to spend a few $1,000s on a handbag, why don't you also own the digital right? Maybe you want to walk around in the metaverse, sure, but what about if you want to resell the good? What about like tracing, you know, counterfeit goods? There's a lot of use cases for this technology, and all of it requires custody. Which is the simple fact there. So if you can't tell, I'm a huge bull. Do I think it happens, you know, overnight? Probably not, but over the next 20 to 25 years of my career, I think I have a pretty good shot of this being a big disruptor.
So what I hear you saying is that your valuable piece of retail merchandise doesn't exist unless it virtually exists.
Correct.
Outstanding.
So, quick question in terms of your marketplace. Would it just be Canadian companies because of your regulation in Canada, or is there an opportunity for you to expand to other marketplaces?
Yeah, that's a great question. So from a custodial standpoint, we can custody, let's say, international assets, but we're very mindful of where they're coming from, the implication of us as a Canadian entity, right? Simple fact. Couple rich individual in Florida that loves the NOx technology, he wants to custody with us, but there's implication from a taxation perspective for Tetra, right? So every deal needs to be, evaluated based on, where the assets are, where are they from, with who, et cetera. Is there regulatory oversight in terms of things that we can't and cannot do? The answer currently is, I'm going to say maybe. And the reason I say this is because the regulators are just not there yet. And I mean this in the most respectful way, right? They're still trying to learn what's the asset class. The reality is crypto or digital asset is borderless. If we were hearing about Blue Ocean earlier today and talking about markets 24 hours a day, like there is no start, close in crypto, right? There are no boundaries. The assets aren't held anywhere. They're all virtual. So do you get in the place, at some point in the future where borders don't really exist for this technology? I certainly believe so. There's why, some big international players are trying to do a lot of land grab in terms of setting up shops in different regulatory regimes globally. So I know I'm not answering your question directly, but the answer is, do we have to be conscious? Yes, we're conscious. Do we have restrictions? No, we don't really, but we're mindful of what we do. Yeah.
The last answer notwithstanding, where's the business risk to Tetra?
Yeah, it's a great question. I mean, I think there's two things that I would point to. One, regulation. You're seeing a lot of regulatory uncertainty in the U.S. I have to say that from a Canadian perspective, our regulators have been slow but somewhat moving in the right direction. You could get to a situation where the regulators say, well, no retail investor can own Bitcoin, and what do you do from there, right? So that is, certainly a risk. And then the second one, I would say adoption, right? While I'm very passionate about what I'm doing, and I think, I come from traditional finance and it just doesn't work. And I believe that this can work in terms of, pipes and infrastructure. Adoption is another big one, right? Ultimately, if you want Canada to move forward in this space, you're going to need adoptions from the big banks and the big institutions. And right now, they're all still sitting in their 39 risk committees to even get let's do a proof of concept, right? And it's been, 3-4 years. So that would be the other risk, is essentially if the adoption curve isn't really there. To, again, democratize this, right? Because I think if anything is this bear market is teaching us that this isn't going anywhere. You're seeing some of the biggest deals being signed right now. BlackRock just signed with Coinbase, right, with Aladdin as a system. I mean, pay attention to the breadcrumbs. The big corporations are telling you this isn't going anywhere. This is here to stay, and they're all making moves right now. Oh, I got 34 seconds.
The future, what about legal transactions where money is held in trust and land transactions? That's a whole big opportunity potentially, yes or no?
Yes, and we have some clients at Tetra that are doing tokenized real estate because they see that opportunity. So the answer is absolutely, but I would say think bigger. Your house, your passport, your university diploma, your driver's license, your health card. I mean, the potential is infinite.